Okay, we're back, folks, and I believe we have a caller today. Mr. Z from Philly is on the line. John, are you there?
You sparked some memories when you were just speaking. When I was a child, when I was a child, but when I was a kid, I lived in the Milwaukee area, and I would go to sleep listening on AM radio, the Bucks games with the Big O, Alcindor, Dandridge, McLaughlin. I forget who the fifth key player was. So that was quite a time for them then.
Yeah, it was a lot of fun. I actually played against Oscar Robertson when I was at Terre Haute Schulte. We played against Christmas Addicts High School when I was a freshman. He was a senior, and they beat us by 62 points in a 32-minute game. But oh my gosh, it was a of course, he went on to play at Cincinnati. Everybody thought he was going to play at Indiana University, but he went to Cincinnati to play. Anyway, John, what can I do for you, my friend? I posted a chart here that I think you might be interested in. That comes from the Elliott Wave folks, showing you that the oversold nature of the Treasury bond market. And we've been down 8 weeks in a row, so who knows whether that's going to be something. What do you think about that?
Yeah, Larry, thank you for that. I had a very specific question for you on the bonds, just for what it's worth. During this bond futures contract decline since Labor Day, 145 down to 136, it's 9 points or so. Mm-hmm. I captured a majority. I didn't capture all of that, but on the short side, captured a majority of that decline. And just between you and I and your audience, I am speculating that lower lows are directly ahead so long as this bounce does not get back above roughly the 139.75 area. And of course, if it gets above, then I'm just wrong, and I'll know that I'm wrong. But barring that, and we bounced and we went to 139, so we haven't gotten over it yet. So my question very specifically, if we turn down right here from this 139 that was last week, my question is, if we turn down and go to lower lows, can you show me what Pesavento patterns, what fib expansions you might be thinking of using to signal covering shorts at a profit, assuming that happens, please?
Yeah, John, I'll post the weekly chart here for the bonds. This is the one that we've been waiting for. It's been bearish for such a long time, but the ABCD on the big rally took almost 8 months. That was from 2017 into the first 9 months of the year. And that gives us a price target of 127. That's 10 handles from where we are right now. You'll notice that there's another ABCD pattern that is there that would come in around 131. That's assuming that we might get a little bit of a rally here because we're down 8 weeks in a row, which in itself is a pretty negative thing. But the chart is so bearish, John, that it really is. We're looking at higher interest rates. It doesn't make any difference what the Federal Reserve does. The market is telling them that they want to have higher interest rates. But I'm looking at 127 as a potential larger target. The only thing that I'm concerned about here is the fact that we've been down 8 weeks without much of a bounce. And you're right, we haven't bounced very much for the last 5 days. So that's telling you that the weakness is still in the market. But my original target would be between 131 and 127 on that long-term bond contract.
Gotcha. Thanks for that. Can I also ask you mentioned the British pound versus the dollar.
Yes.
I'm wondering, do you possibly have the cross pair between the euro and the pound? And if you do, what I'm wondering about is if, in fact, well, there you go on Tiger TV, the British pound euro weekly. And can you just tell us what you see where this could conceivably rally to if the Brexit negotiations with the EU proceed in such a way that the British pound rallies vis-a-vis the euro? I'd appreciate your thoughts on that, please.
Sure, John. If we look at this on a weekly basis, it's a little similar to what we saw on the British pound on the daily. If we can get it above 133 on the pound, we can easily get it to back to the 78% of that whole range from Brexit, and that would take it up to about the 142 level. But there might be a lot of emotionalism, but nothing like what happened, with Brexit when it came out, because that was an outlier event. The people in the UK, the odds were 9-1 that they were going to stay. And when it happened, it really, well, as you can see what happened to the pound, because you were involved with that too. But it was a total surprise. Those are the kind of things that when they happen, it changes the economic thought. And it's been 2 years now, a little more than 2 years. Well, coming into 2 years. Yeah, it's been more than 2 years. And so anyway, those are the ones that, you have to hang your hat on. If this turns out to be a good thing for the UK, which I'm sure it would be, either way, it doesn't make any difference. I think they'll probably get a little bit of a rally in here, but I believe they are going to leave. The odds say that they are, but then again, that could be, something different. I think the change here would be the fact that they would have another vote and then, go back the other way. That would really upset the apple cart and cause
Larry,
more consternation.
Just to review, I'm looking in Tiger TV, and thanks for that, the weekly British pound versus euro chart, that's currently at, rounded up, 114.
Yes.
If, for whatever reason, fundamentally, as a result of these negotiations and whatever that outcome is, but it's at 114, please repeat what you said. You could envision this rallying to where?
Up to the 120. On that chart, it would be up to about the 134 level.
I got you. Very good. Right. Very good. I'm actually speculating as we speak right now with a long position in British pound versus euro. So we shall see. So thanks for giving me that. I can factor that into my thinking. I appreciate it.
Not a problem. Listen, thanks for calling in, my friend. We really appreciate it. Anything else I can help you with?
No, that's it. Thanks again, Larry.
All right.